All right, welcome to this explainer. Have you ever looked at a company that is just fundamentally changing the world, like literally reshaping reality right in front of your eyes, but then you check its stock price and it's just completely flat? When we started unraveling this whole anomaly, it honestly blew my mind. So today we're diving into the mystery of Tesla's stagnant stock price. But I promise you, this is about way more than just selling cars. This weird anomaly is actually a massive window into a total paradigm shift. It exposes the hidden psychology of Wall Street and shows exactly how the impending arrival of artificial general intelligence, or AGI, is just totally breaking all the old rules of investing.
So here's our roadmap for today. We're going to cover 1. The $400 mystery. 2. Voting versus weighing machines. 3. Why markets hate waiting. 4. The death of value investing. 5. The AI Titans race. And finally, number 6, the possibility explosion. All right, let's jump right in.
Starting off with Section 1, the $400 mystery, or a glaring disconnect.
So think about this central question. Why on earth is Tesla's stock hovering right around $400? Now, what makes this number so completely shocking is that, well, this is the exact same level the stock was at way back in November 2021. Think about that. For over 4 years, despite absolutely everything that's happened in the world, the stock has effectively flatlined. I mean, sure, it's bounced up and down a bit, but it just keeps returning to this exact same baseline.
But here's where it gets crazy. Consider the stark contrast happening right now. While that stock price basically did nothing, the technological leaps that happened during that exact same time, they are absolutely mind-boggling. We've got full self-driving capabilities actively navigating complex city streets right now. We have Starlink providing high-speed communication to the entire globe. We even have instant auto-language translation over on X. Shopify's CEO, Tobias Lutke, recently talked about this. He was just marveling at the reality of getting into his car, having it literally drive him to work without him touching the steering wheel, using Starlink to work from literally anywhere, and jumping onto X to have these seamless, instantly translated conversations with people in Japan or Saudi Arabia. The tech is essentially magic at this point, but the stock is just stubbornly stuck.
Which brings us to Section 2, voting versus weighing machines and the mechanics of market pricing.
To really make sense of what's going on, we have to look at this legendary quote from Benjamin Graham. You might know it, Warren Buffett repeats it all the time. He said, "In the short run, the market is a voting machine. In the long run, it's a weighing machine." And that right there perfectly frames the foundational difference between short-term market feelings and long-term reality.
Okay, so let's break down how these two concepts actually clash. The voting machine is all about stories, right? It's driven by excitement, hype, and short-term sentiment. But the weighing machine, that's driven by real product sales, core business performance, and cold, hard cash earnings. Now, for a massive growth company that's built on the promise of the future, its core business today still has to perform well to keep that story alive. But over the last few years, mostly thanks to high interest rates and broader economic headwinds, the core auto business has struggled. And without those massive earnings growth numbers to actually weigh, the stock was essentially left entirely at the mercy of the voting machine. It was just bouncing around purely on shifting vibes and sentiment rather than fundamental valuation. So let's move to Section 3, Why Markets Hate Waiting, exploring the psychology of infinite futures.
The funny thing is, we have actually seen this exact movie play out before. Just think about this timeline. Back in September 2014, the stock was sitting roughly at $18. Fast forward through literally years of moving completely sideways, and by September 2019, the stock was at $17. Seriously. That is a brutal 5-year stretch where the price went absolutely nowhere. Investors were pulling their hair out, the whole narrative seemed completely dead, and almost everybody threw in the towel.
But then the market showed its true manic colors. Because just 1 year after that agonizing 5-year flatline, the stock exploded by 700%. Why? Well, because the Model Y finally proved that it could actually scale. And the second the market realized mass manufacturing was a reality, they didn't just bump the price of a few bucks. No way. They sent it straight to the moon. So if you've ever wondered why your tech stocks are just so unbelievably volatile, this is it. The stock market fundamentally hates waiting. It just doesn't do incremental, reasonable adjustments. When a company proves a new growth model works, Wall Street instantly tries to price in the entire infinite future of that product. They literally project out 1,000 years, discount it back to today, and boom, shoot the stock up 700%. On the flip side, if a growth rate slows down even a tiny bit, they want to slash the valuation immediately.
And that is exactly why stocks living on the bleeding edge of innovation go through these long, super frustrating flat lines, followed by just massive, erratic jumps.
This brings us to Section 4, the death of value investing and the AGI paradigm shift. I absolutely love this analogy from our source material. Trying to apply traditional value investing advice today is a lot like a boomer telling a Gen Z job hunter who can't get an interview to just go in there, look them right in the eye, and give them a firm handshake. I mean, it's a charming thought, right? But it is deeply, profoundly outdated. The game has totally changed. Let's break down exactly why that is. Consider the massive difference between rear-view investing and future-predicting investing. You see, reading old balance sheets and relying on past data, that worked beautifully in stable, slow-moving markets. But if you try to evaluate a company that is currently building AGI or humanoid robotics, and you base your thesis merely on its past quarter's car sales, you are going to be completely lost. Today, you have to anticipate disruption. You literally have to predict paradigm shifts. And maybe most importantly, you have to find companies with indestructible cash flows, money engines that can actually fund these massive future innovations without the company going bankrupt. Because guys, the velocity of innovation right now has just absolutely skyrocketed. We're at a point where 1 month of AI progress is roughly equal to an entire 12 months of past progress. It's crazy. Companies like Anthropic are spitting out new, globally disruptive models every single month simply because the AI is now helping them code the next AI. Staring in the rearview mirror when you are moving at literal light speed is basically a guaranteed way to crash. So, who's actually going to win this thing? Section 5, the AI Titans Race, the battle for the future.
All right, let's unpack this concept, because it's massive. Elon Musk's ultimate ambition isn't just to write good software. His goal is to become the physical AI king. What does that actually mean? Well, it means building an entity that is capable of instantaneously redesigning and frankly taking over global physical manufacturing. It's about turning the factory itself into the ultimate product. Just imagine an AI that can ingest every single blueprint in a massive global supply chain and then instantly output a factory design that cranks up production by 1,000 times. Right now, we are watching what analysts are calling the race of the 10 titans. These are the players who will ultimately dominate the global economy. Think about this heavyweight matchup. On one side, you have what's being called the Anthropic and Amazon axis. They're combining this basically uncontested leadership in AGI software with massive cloud infrastructure and effectively infinite capital. Then on the other side, you have the Tesla and SpaceX ecosystem. They are out there pioneering millions of humanoid robots, autonomous global transport, and literally limitless scalable space travel.
So how do you actually survive this clash of titans? Well, it requires two things happening at the exact same time: infinite innovation and indestructible cash flow. You have to be able to build massive supercomputers and basically print new factories, which costs billions upon billions of dollars. But to do all of that without going bankrupt, you absolutely need incredibly robust, high-margin cash engines. And this is exactly why things like Starlink and the upcoming Robo Taxi networks are so vital. They are what generate the massive free cash required to actually fund this war for AGI.
And that brings us to the ultimate macroeconomic consequences in Section 6, the possibility, explosion, and engineering civilization. We are stepping into an era that's being described as the possibility explosion. This disruption, it is not going to politely stop at, slightly better software or some cool self-driving cars, not even close. As AGI scales up, we are looking at the disruption of entire political structures. We are talking about the ability to engineer entire societies, entire civilizations, totally from scratch. Imagine just being able to instantly redesign the very foundational supply chains of human existence. Everything from global shipping routing to generating infinite energy. The whole scope of the future is expanding 1,000,000-fold right in front of us.
Which really leaves us with this one final vital question. We've seen exactly why stocks flatline. We've seen how the market consistently misjudges the future. And we've seen the sheer mind-bending scale of this AI race. So, as these capabilities explode 1,000,000-fold, as we shift from just building little apps on our phones to literally engineering civilization itself, is your portfolio, and honestly, is your mindset, actually prepared for what comes next?